Hey, so you got your mortgage statement and the payment went up. So here's one of my houses, and I went from 1812 up to 2036, and it's telling me that I've got a shortage in my escrow of 2403. Okay, that doesn't sound like it should be right, so I decided to dig in and take a look at it. And in the escrow analysis here, I noticed that, hey, guess what? They paid my homeowner's insurance twice. $1696.50 went out 2 times. I called them to try to get it sorted out, and had to talk to my wife. We went back in time and recalled that, yes, we did get a check back from the mortgage company saying they overpaid, or maybe the insurance company saying, hey, here's extra money that we don't need for the insurance policy. What happened was my insurance companies changed in that timeline. So the check went to them. They said, hey, we don't have this policy anymore. The money came back to us. We discussed it, made a note of it, but forgot about it months later that we received that money. What we did at that time was, when we did get the money, is we promptly sent the money back into escrow with instructions for them to pay the balance against, to pay that amount, that $1696.50, to put it back into escrow and not to pay down the principal balance, but specifically to put it back in escrow so we wouldn't end up with a shortage in the account, which is what they're telling me. So after a number of conversations and running all around the world, I got a hold of the right people, and I've got the number for, in this case, the escrow department directly, bypassing all the automated stuff. And I had them search it out. I discussed with them the date that my wife sent the check in, the date that they cashed the check, and had the letter that my wife sent saying, apply this towards escrow. Well, lo and behold, guess what they did? They didn't listen. They applied it against the principal balance instead. In that case, now my escrow account was short. So I've had them reverse that. So now they're adjusting the mortgage. They're going to pull the money, that they put towards the principal. They're going to move it back into escrow. So I'm going to get my mortgage payment recalculated and refigured. It took a little due diligence. It took a little digging. But there's no reason why my escrow account should have been this short. Now, it is common that escrow accounts will change a little bit, perhaps every year. Taxes go up. Insurance might go up. As things change, your mortgage payment's going to change a little bit. 99.99% of the mortgages out there, at least that I've done, have been fixed rate mortgages. So with those fixed rates, that's going to remain constant. That's going to remain steady. If you have an adjustable rate, of course, you know who you are. Then, of course, your loan will adjust at those periods. But for the most part, your mortgage payment should remain constant with a little bump here and there as escrows change for taxes and insurance. But there's no way my escrow account should have been short. It was a screw up. It was an oversight, and it has been corrected. Now I'll get my payment recalculated, I'm assured, before the time the next payment is due, so we don't have to send in this shortfall that we're currently being asked to pay. Hope this helps you. If you have any questions, please don't hesitate in reaching out about your escrow account. I'd be more than happy to chat with you about that. Don't mind doing a review of that if you'd like me to take a glance at it for you to maybe help try to deduce what the issue is. And of course, I get paid to do mortgages. So if there's anyone you know, family, friends, coworkers, anybody that wants to buy, sell, refinance, renovate, get a home equity line, or do a reverse mortgage, I've got you covered. Pretty much anything residential. So, hey, I hope this video is helpful. Again, reach out if you need me. Feel free to drop a comment. My email is dwakefield@primelending.com, and you can always find me at www.davidwakefield.com. Thanks so much. Make it a great day. Bye for now.